Hi guys, pleasure to be here. My name is Tristram Jones. I'm the head of digital assets at AngelHub, a tech investment platform allowing our investors to co-invest alongside us in exciting startups with massive growth potential. Web3 sits alongside ESG, FinTech, and Industry 4.0 on our verticals that we invest into. You'll be hearing more about ESG and the circular economy later, but the title of this workshop is Investing into Web3 in a Bear Market. Growth assets, including equities, technology stocks, and cryptocurrencies, are down badly this year, having been hit by a perfect storm of global factors: war, inflation, and rising interest rates. Cryptocurrency projects in particular have come under a lot of stress, with many individual tokens down 99% from their all-time highs. Terra and its not-so-stable coin UST, Voyager, Celsius, and Three Arrows Capital have notably exploded this year, bringing a dark cloud over the entire Web3 ecosystem. However, much of this criticism is wrongly attributed to Web3. The blow-ups I just mentioned are due to centralizing control and lack of transparency, and are analogous to a Lehman moment in 2007-2008. In fact, blockchain and Web3 are actually the antidote to a lot of the problems we have seen, bringing transparency, decentralization as core features. But as I'll talk about for the rest of this workshop, all the talk about token prices, bear markets, or crypto winters misses out on the huge tectonic changes that are disrupting or about to disrupt many industries. These periods of poor price performance or valuation have historic precedent, and it's where the great companies are building and the best returns for investors over the next decade are made. But in this talk, I shall give an overview of Web3 and give some context of how this technological revolution is occurring. The opportunity, what is it? And is it just us that's thinking this way? The gateway. There is one specific area that's proving to be the gateway to Web3, and it's gaming. It's showing clear signs of transforming the gaming industry and proving adept at onboarding millions of new users into the Web3. We'll also look at the other sectors, how we at AngelHub divide up the Web3 landscape, and how Web3 will affect other areas of our economies and even global trade, as well as looking at the pain points. So with every new frontier, there are pain points that occur in investing in new technologies and make this very difficult. We'll go through some of these and see how we can alleviate them. So what is Web3? What's happening? Much like other industries and sectors, the internet is undergoing a continuous evolution. In the 90s, Web1 was the first iteration of the web, with a collection of static websites. It was the start of personal blogs and Netscape browsers. But in the 2000s, centralized and closed web platforms emerged with the rise of big tech, companies such as Amazon, Google, and Facebook. The social network era began where there are multiple forms to interact and communicate. Tech companies tracked users, storing their data, which became an immensely valuable commodity. The term Web3 was created in 2014 by Gavin Wood as a developer of the cryptocurrency Ethereum. And similar to the previous web iteration, it's open to broad interpretation. Web3 is using blockchain technology to create a more decentralized space, where the aim is to change the user from the product to the owner. Web3 for the first time allows users who generate content for a platform to have the ability to be rewarded for this content and obtain actual ownership from it. Web3 promises a hollowing out of middleman platforms which have operated with monopolistic powers, taking the vast majority of earnings generated from the content creators. But this digital ownership and Web3 also allows completely new business models to be created, much like SaaS and subscription-based revolutions from the decade before. Web3 is to give back power to users instead of the tech giants by enabling digital ownership. Now, what is the opportunity? Now, I believe that Web3 is the biggest investment opportunity of this generation, and that is despite the crypto winter and inevitable further hiccups in the adoption curve. Web3 today is still in its early stages, somewhat analogous to the rise of the internet 25 years ago or smartphone adoption nearly 15 years ago. The devastating dot-com crash of 2000 didn't kill the internet, and the 2008 financial crisis didn't halt the explosive growth of the internet, smartphones, or mobile gaming. Now, Web3 is a fundamental game changer, with some projections showing that in 2023, the Web3 sector will be worth more than $6 trillion, with growth projected at a compound annual growth rate of 44.6% from 2023 to 2030. And it's not just us that believe this. Leading institutional, private equity, and VC firms are embracing Web3 with billions upon billions of dollars. In 2021, VCs deployed over $30 billion globally into Web3 startups. Funds such as Paradigm raised a $2.5 billion fund in 2021, and Andreessen Horowitz raised $2.2 billion fund in 2021, followed by $4.5 billion in 2022. Facebook, rebranding to Meta, is not anecdotal. Big tech companies and corporates are strategically migrating. Nike bought RFKT, a digital sneaker brand. Gucci appointed a head of the metaverse. McDonald's, Tiffany's, Adidas, and many more household names have also partnered with Web3 companies as a way of promoting and selling their digital assets. Meanwhile, a myriad of tech entrepreneurs are also leading the development pace by rethinking and revolutionizing entire sectors of the economy in light of this change. And there are some other metrics too that are hugely important for future success. One of my favorite indicators to look for is talent. Where are the best and brightest minds going? And this flow is quite consistent. Top tier talent is continuing to migrate from Web2's Wall Street and Silicon Valley and into Web3. The Electric Capital Developer Report of public GitHub repositories shows 100% growth in contributions to Web3 projects since last year. And job postings mentioning blockchain are at an all-time high, despite crypto winter, up 400% since 2020. And it's reinforced by another study saying that the supply and demand of talent in the global blockchain field are out of balance, with good quality candidates in short supply. However, blockchain and Web3 investment is still only a fraction of the wider fintech investment, roughly 27% of the size. And this is even smaller in Europe. So despite these big raises, there's also a lot of capital that's left underdeployed. And a research study by The Block showed that blockchain venture funding declined roughly 22% in Q2 compared to Q1, from $12.5 billion to 9.8. And this bear market is actually allowing opportunistic investors an opportunity to invest in some Web3 companies that have continued to grow, continued to develop products, increase their users, increase their revenue base substantially, but allows investors the same terms to invest as a previous round before. So with a disciplined approach, one can buy better, less risky businesses at lower prices. So to summarize this section, investors who have turned away from tech and the internet following the early 2000s dot-com crash missed the best opportunities of the following decades, including computing, social networks, and online marketplaces. Many great businesses were built during bear markets, with founders rationing resources towards only the most productive areas, ready to be in a position of strength when the tide turns. Thus, we believe that Web3 is an investment and an asset class that you simply cannot afford to miss out on. So let's get under the hood and look at our sort of first segment, the gateway into Web3 for most people, games and gaming. And it's very relevant as I'm here sort of speaking at the Cyberport Venture Capital Forum, because Cyberport, of course, is home to two of the biggest Web3 gaming companies, the Sandbox and Animoca brands, both of which I'm incredibly proud to say are also AngelHub portfolio companies. Now, we can't really talk about the rise of gaming and Web3 gaming without NFTs. And so to briefly describe NFTs, or non-fungible tokens, These carry a unique digital identity that can be traded between owners on the blockchain. These NFTs contain extremely trustworthy documentation of history and origin, as blockchain technologies allow the origin of all items to be traceable. Gaming NFTs are the most frequently traded category of NFTs, representing more sales volume than all other NFT categories combined. These gaming NFTs tend to have a utility within the game itself, be it a faster car or a more powerful sword. According to a report by Non-Fungible, gaming NFTs represent 33% of all NFT transactions in Q2 22, with the average gaming NFT being worth $331 US. Gaming NFTs, like other NFTs, are demonstrable ownership of a digital asset and have the property that they last longer than the game itself. In part, due to their interoperable nature, they can be used across games, but also there's a marketplace for trading these assets. So when a player stops playing a certain game, they can sell the assets that they build up playing. Games such as the Playkin series by Village Studio and Axie Infinity, the most popular play-to-earn game of 2021, allow users to buy NFTs, which can be used interoperably across a series of games, representing different characteristics depending on which game the owner plays. The traditional model of gaming was a pay-to-play model, which required users to purchase upfront games. For example, buying a copy of EA Sports FIFA 2022 for a PC or Xbox would cost you around $60 US. This is the cost for the initial software to play, the keys to the door, so to speak. But if you don't pay this upfront cost, there's no way to play the game itself. Free-to-play models are replacing pay-to-play and unlocking a larger customer base through mobile technology. Advertisements and purchases of virtual goods inside these games increase the revenue upside for game developers. Play to earn refers to the concept of gaming where a platform provides its players with a chance to earn any form of in-game assets that can be transferred to the real world as a valuable resource. Because NFTs recognize the ownership of in-game assets, they enable play to earn models. Games can raise capital and rewards through NFT sales as well as the in-game rewards. Now, gaming itself is massive. Nearly 3.2 billion people will play games in 2022, spending a combined total of $196.8 billion. Gaming is the first mass market use case for Web3, empowering customers to own digital property and navigate in the metaverse. Blockchain gaming relies on the build-up of an entire ecosystem and new economy, and as such is the blueprint for all other blockchain embracing sectors, such as art, retail, or even social media. And to quote Yap Su, founder and chairman of Animoca Brands, every person who plays blockchain gaming has ownership. So stickiness is really high at 70, 80%. Stickiness is high because you're invested in the game itself. However, in contrast to free-to-play, stickiness is a big problem. So let's consider the gaming market as large. Did you know that the average 13 to 17-year-old spends almost 40% more time per week playing games than on social media, watching TV, or listening to music? During a 2022 survey, 36% of video game players still come from the 18 to 34 age demographic, and 6% are 65 years and older. So while still nascent, blockchain gaming has passed the inflection point with tremendous depth and growth potential. The blockchain gaming industry grew 2,000% in 2021 and is expected to reach 23.3 billion by 2028, while the entire metaverse market size is expected to grow by 829 billion by then. So how do we at AngelHub divide up the ecosystem? Now, largely, we divide the ecosystem across 4 different verticals. Web3 gaming, as I just mentioned, which are games and NFT-enabled games that allow users to claim tokens for the games they play. Digital identities, such as NFTs, which a user can can use and generate an on-chain history of their achievements. Infrastructure, such as the blockchains themselves and the wallets associated with them. And DeFi, decentralized finance. Why is investing in Web3 difficult? Now, Web3 is an extremely new industry. And like all new industries before, they come with many pitfalls. The industry itself is still nascent and volatile, with not obvious metrics to pick winners from the losers. There's a lack of access for people, and it's also an insider's market. Specialist expertise is required to understand the underlying technologies, business models, and valuation methodologies. And skill is needed to build a coherent and diversified portfolio, and then technical expertise to leverage them together in an ecosystem. Time allocation is critical to be part of the ecosystem and meet entrepreneurs. And for most investors, this is very difficult. At AngelHub, we have our tech investment platform provides a solution to these problems. Thank you. And any questions?
Okay, Tristan, we have some questions from our attendee. The first question is, what do you think about the current sustainability or playing the earn games?
Sure. So one of the criticisms leveled at play to earn games
Tristan?
is that they haven't been so sustainable, that rewards for current players or rewards for early players are generated from an endless stream of players coming. And this has led to sort of criticisms about the sustainability or the long-lastingness of the model. However, this is still just the first iteration of gaming models like this. And I'm very optimistic that new things are being tried and iterated upon to improve future versions of play-to-earn games, or even existing play-to-earn games, such as collaboration with real-world brands and more sustainable token economies.
Oh, sorry that we have the second questions. Where are some real world you use the case of NFTs?
Sure. So one thing that we're exceptionally optimistic about, and we need the regulation really to sort of green light this, is that a whole host of off-chain assets can turn into an NFT form, the likes of property or fine wine or art. And we've already seen that to a certain extent with art and art markets thus far, with markets and famous artists producing on-chain assets that can also be turned into physical assets.
Oh, we have lots of questions then. The third questions will be, what is needed for the ecosystem to grow?
Sure. So as I just mentioned in the sort of question before, certainly there's a sort of regulatory overhang over the industry, and we need some sort of clarity from certain regulators about what's sort of acceptable for this market to grow. So it's holding back some sort of development and advancement if there is this uncertainty, which definitely is there. But also real world brands and real world companies becoming more integrated within the wider like blockchain and Web3 ecosystem is definitely something that we're seeing too. And that is hugely optimistic for the growth of the entire industry.
Okay, then we still have lots of questions so we will keep going to ask Tristan. And the four questions will be, do you think the Web4 will be replacing the Web3 in the future?
Sorry, can you repeat that, please?
Let me repeat, sorry that. Do you think Web4 will be replacing the Web3 in the near future?
Oh, certainly not in the near future until there's a lot that a lot that Web3 can build and develop, and I think that we've only scratched the surface of its true potential before we can even start talking about any sort of replacements.
Okay, so we still have some more questions. The next questions will be, can Web3 will really decentralize the internet?
Yes, I think that it's a very complicated sort of question or answer, but there will always be some sorts of concentrations of power. But in a sort of true decentralized blockchain, there will continue to be like aspects of decentralization that really weren't so present before.
Okay, so okay, we have the next questions. So many are arguing NFT is just a bubble. So is there any sign that this hub is going to last very long and it will deliver the future?
I think when we talk about bubbles, I think we have to disaggregate the difference between like the price of certain NFTs and actually the sort of technology that's underpinning them. And if there's sort of one message that I want people to get from this presentation is that current prices do not equal the potential of a lot of this technology stack. And so I can't sit here and tell you whether the prices of certain NFTs will recover or not by that definition of a bubble. However, I can say that I'm incredibly confident that there'll be more and more real world use cases, more and more just use cases in general for NFTs, such as your digital identity, soul-bound tokens representing potentially a degree or your employment history, NFTs as a work of art, NFTs as assets within games, NFTs like NFTs can represent a lot of different things. So I think it's I think the word bubble is definitely wrongly attributed to them in this case.
Okay, thank you, Tristan. But we still have lots of questions from the attendee, so that we have some more questions to ask. So the next questions will be, apart from DV, NFT, and gaming that you mentioned within the Web3, any other area that you think is worth to investing? And what assets do you think is required to make it to worth investing?
Right. Okay. So to sort of break down that question to its sort of component parts, I think firstly, when we look at any project in the Web3 space, we look at the sort of degree of connectivity of that project. Are there lots of like touch points with other projects? Is it sort of a central feature, or can it be a central feature of a sort of ecosystem itself? And this goes from whether it's a blockchain we're looking at, a DeFi protocol, or NFT sort of company itself. And so really, when we're looking or analyzing across these areas, that's one of the first things that we're looking for. And so to say, like, apart from we're like, to sort of simplify that too, we look at places where, like, rather than an individual sort of NFT item, we look for a company that might provide some sort of infrastructure as a function of those NFTs too.
Okay, we still have 3 more questions to ask, so that the next questions will be, you talked a lot about the gaming. Is Web3 going to do any significant development to other areas like health, transportation system, etc.?
Absolutely. I think there's huge potential, and I think we're seeing early stage in certain areas like manufacturing or global trade, where sort of private blockchains are being used to track merchandise or to track stages along a production line. And absolutely, in terms of health, one could easily sort of imagine some sort of health system built across a blockchain where each stage is is visible to operators of that blockchain and provides a trustless sort of store of record for all the procedures that go on along that line. So absolutely, there is huge potential for sort of Web3, or more specifically blockchain or distributed ledger technologies, to disrupt those sort of industries. And that's an area that we're looking closely at.
Okay, cool. That we have 2 more questions. That the next questions will be given the cryptocurrency is blocked within China. Do you think Web3 is workable within GBA or even China at all? Will you invest into it if it is available?
Yeah, absolutely. I think one always needs to be conscious of the sort of like, as I sort of said, to one of the like stumbling blocks to Web3 is the sort of lack of regulation or lack of sort of oversight that hopefully will be clearing soon with new regulations in place. And those will sort of dictate about how certain ecosystems will be able to be built and sort of what flavor they take. And so what's likely in China or in other areas are that Web3 might take a slightly different form. And absolutely, that would be very interesting to see how the different iterations between different zones take place and what sort of investment opportunities are created from that.
Okay, we have one last question. Can you share more on how Web3 is going to evolve and what are the possibilities?
Sure. So the evolution of Web3 is going to be more and more users coming on chain, and that's going to require certain technologies and certain changes to the infrastructure, make it far more friendly for non-native users. And as I sort of laid out, like, there are plenty more sort of real-world use cases and industries that can be disrupted by Web3, and the next generation of users coming will have access to that. But however, the version of Web3 or the sort of front page of Web3 that they see right now is likely to change. Still, there are still huge hurdles with the likes of sort of wallet technology and seed phrases that are not necessarily the most user-friendly for non-Web3 natives. And so there'll be huge investment and changes into those sort of areas to allow more and more people into Web3.
Okay, thank you very much, Tristram, for today, your wonderful sharing. Thank you for joining us on today.